Man, we got some beautiful weather here today in Miami. 35-mile-an-hour winds, on and off rain for the next 4 days. Perfect. You guys up north must be really missing this, right? I'm just kidding, guys. Obviously, the weather's not great, and there's a decent chance I might have to stop this video somewhere in the middle and finish it in my home office. Hopefully that doesn't happen, but we'll try to get through it here outside in the neighborhood. But I want to talk to you today about these massive and steep price cuts that we are seeing on brand new homes right now. I think the brand new home market pretty much gives us a clue of what might happen next with existing home sale market in the future when we get more inventory. Because right now on the brand new home market, it's a buyer's market. And that's why you could argue that, you know, prices are coming down because there's too much inventory. Okay, fair enough. That's a good argument. When it's a buyer's market, prices tend to come down, right? And there's a lot of inventory for sale as well. Well, let's take a look at what's happening. First of all, back in October of 2022 was the peak of the brand new home market. According to the Fred data, back then the brand new home price was $496,800, okay? Fast forward to today, these prices have sank all the way down to $409,300, and they hit somewhat of a peak in August and have just been steadily coming down since then. For anybody who's counting, that's an $87,500 price cut from a little over a year ago, guys. That is a substantial cut, and that's a 17.6% reduction in these prices. I would be willing to go as far to say that the new home market is in the middle of a crash right now, because my definition of a crash is about a 20% reduction in prices within a year and a half. And they're well on their way to see that 20% reduction within a year and a half. So I would say that the new home market is essentially crashing. There's a decent chance by this time next year, the price of a brand new home could be down by as much as 30%, especially with how much building is supposed to continue to be taking place right now. And one of my viewers, Noreen, she sent me a couple of pages from some new home builders here in Florida, and I wanted to share some of this with you guys so you guys can get an idea of just how much they're cutting prices to get rid of these properties right now. This first one, I believe, is from Lennar Homes, and for a limited time, they're offering to buy these homes, and first of all, you pay zero closing costs. That's going to save you a significant amount of money right off the bat. They have 50 homes in this area they're trying to sell in Florida that are under $350K right now that they're advertising, and they're trying to get you to close this month. They want to close out this year with more of these houses being sold. Surprise, surprise. I want to show you some of these listings and how much they're cutting the prices on these places to get them sold, and a lot of these houses aren't even built yet. And as you guys can probably see, the rain is starting to pick up. I might have to call it quits if it picks up even further, guys.
Wow, you guys want to see crazy? I'll give you crazy. This house is a tear down, so it's just the land being sold for $11.5 million, but it's a flip on top of a flip. It was flipped in 2021, then the new person tried flipping it again after they bought it in 2022, and fast forward to today, they only paid about $5 million for this house, which is still a lot of money for a tear down, right? But then subsequently they listed this house a year ago in November of 2022 for $6.5 million, and then bumped the price all the way up to $12.5 million. Now they're at $11.5 million and they can't sell it. And they're stuck with a house that's sitting on the market empty for over a year with a property tax bill of approximately $89,000 a year. How's that for you for a successful business venture? You put a sign in the yard showing that you can flip this house and, you know, put a new construction house on this site and magically it's worth $12 million, guys? That is crazy.
I want to show you guys some of these listings. On this first page here, you have listings that are being reduced by literally up to 10% right now, which is a pretty big price cut. When you already consider the fact that these home sales have come down on a nationwide average by almost 18%, and then we're seeing further 10% declines, that's 28%, guys. So that's flashing alarm bells, and these prices are crashing, okay? There's no other way to put it. If this was happening in the existing home sale market, I'd be willing to bet that pretty much everybody out there would be agreeing with me that this is a home price crash. But yet it happens in the new home market. Nobody blinks an eye. You have homes that were costing $350,000 being cut by $33,000, a $387,000 house being cut by $39,000, $386,000 house being cut by $37,000. Another $36,000 price cut. You have other homes here on the list that are being cut by $32,000, $33,000. And this is for a brand new house, guys. So you're talking the price that they're willing to sell it to you is now at the $300K mark. That is well below the median price home right now in the United States of around $415,000 roughly, depending on which source you look at. That's a full $110,000 less than the average median price home across the country right now. And guess what? They still can't sell them. Okay, the prices are still coming down. You got some of these other homes too. $27,000 price cut, $22,000 price cut, $20,000 price cut. There's even one house on here with a $47,000 price cut, guys, from $397,000 down to $349,000. That is a huge cut, okay? And they're still willing to sell it to you with incentives and perks and free closing costs. I mean, come on. It's no wonder that existing home sales are in the tank because, you know, these brand new home sales are offering far better deals for the most part. And there's a lot more selection to choose from. You guys can see this is just one subdivision here that they're building of all these brand new homes that are available for you to choose from. But then you have everybody saying, well, Michael, when mortgage rates come down, especially if they get to the 5% range, then everybody's going to flood back into the market and that's going to make home prices shoot through the roof. Well, if we look at what's happening with these brand new homes, that's not happening. Right now, the new home sale market has 7 or 8 months of inventory. So that is a lot of inventory, which is far more than the existing home sale market has of about 3 months of inventory right now. They have to get aggressive and competitive to sell these houses because there's a lot of them for sale. Because if we look at this other page from Pulte that Noreen sent me here, Pulte is offering a 5.25% mortgage rate, and they still have to cut prices on these houses, guys. And this is a fixed rate. This is not a mortgage rate buy down. This is a 5.25% rate for the life of that 30-year loan. And who knows what other type of incentives they're going to be giving you on top of this. And this is what I just can't stand, guys, because you have people like Barbara Corcoran who keeps coming out and telling people that they need to get into a house right now, that there's no chance of prices coming down. When we literally have seen prices come down substantially in the new home market. We've already seen prices come down substantially in the existing home market in places like Boise, Austin, Texas, San Francisco, parts of Arizona. Even prices are starting to fall in areas of Florida now where inventory is exploding. I mean, Barbara Corcoran literally just came out this week and told people that if you're waiting for home prices to come down, then you're a fool right now. That's what she's saying, guys. It's basically like what Dave Ramsey's saying, but she's kind of being even harsher about it. And I understand there are places where prices are still going up. I live in one of these places here in Miami. I'm not blind to the fact that there are metros out there where prices are coming up, and then there's more areas where prices are still going up than where they're going down. That is fair and valid to say. But it's also fair and valid to say that that's probably not going to last forever, especially when inventory turns around. Because we can see what that looks like in the new home market. We can also see what that looks like on the west coast of Florida right now, where inventory is absolutely skyrocketing. And with these 100% year-over-year increases in inventory, we can see that prices are starting to fall. In some areas, they're down as much as 3% year-over-year. Is that a huge fall? No, it's not. But it's just the beginning, guys. When more and more inventory continuously gets added to the market, this is what you can expect to see. She also said this week, she's like, oh, you're much better buying something now if you can, because if you don't have a chit in the game, you continue to be a tenant and wait the market out, which many people are thinking right now that they should be doing. They're dead wrong. Well, you can be dead right or you can be dead wrong depending on where you live, guys. And that's why it's so important to track your local market, know if prices are going up or down. Are you seeing inventory go up or down? What's happening with rent prices? Are rent prices going up or down? These are all key indicators of what's going to be happening where you live to see if you in fact are going to be dead right or wrong. Even Redfin, guys, like in this same story that talks about Barbara's kind of rude statements here, Redfin saw that median asking rents saw their biggest year-over-year drop since February of 2020. Also, Redfin's most recent home price data showed that home sales as of last week are clocking in at $364,535 median price, And in October, it was $414,000, guys. So we're talking a huge difference here in how much prices have come down on a median scale, according to Redfin's most recent numbers. But nobody wants to look at that, including Barbara Corcoran, apparently. And I know that she's like, from New York City or whatever, she lives up there. And, you can't really compare living in Manhattan and New York City to the rest of the country, guys. Just like you can't compare Miami or Los Angeles, places like this, to the rest of the country. There's always going to be more demand in places like this because we have high-end real estate that attracts, millionaires and billionaires that buy things here. And it's just a different market than if you're buying in Des Moines, Iowa, or Atlanta, Georgia, or Charleston, South Carolina. These are different places that need to be looked at individually. She also goes on to say that if you have any way of getting cash together and getting into the market and buying a house and getting out of a rental, which is tempting because it's a little cheaper, don't do it. She says, buy yourself a house. I don't know, guys. I firmly disagree with this statement right now just because of the state of affairs. I'm just genuinely looking at where things are at, what the data is telling us, and the direction that things could be headed. And I think that's poor advice. But I do think that anybody who wants to buy a house needs to know what's happening with prices in your neighborhood, what's happening with inventory in your neighborhood, what's happening with rent prices in my neighborhood. If you don't know those things, you're not in a position to buy a house, guys. You're just not, because you're uneducated, and you shouldn't be buying if you don't know what you're buying and how much you should be paying for it. If you know those stats for your area and you're confident that inventory is, still very low and it's probably going to be low for a long time, or it's always low, then go for it. I'm not sitting here telling you not to buy. I'm just telling you to be careful if you do, because people like this are kind of pushing people into this FOMO mentality still of, if you don't do it now, you're never going to be able to do it. And that is just false.
Here we have another house that's sort of just languishing on the market. It's only been 2 months, but no price cuts or anything like that. $3.5 million, but at least it's not a flip. They bought it in 2010 for $1.1 million, and you can just see the price history of this house, how much things have gone up like crazy. Back in 2000, this house was $420K, and their property tax bill here is about $14,500 a year, which is nothing compared to the last one we saw at $89,000 a year. But still, that's a lot of money just to be paying Miami-Dade County to own this house.
Now, one of my viewers, Lauren, she sent me this story about layoffs, talking about all these layoffs that are coming down the pipeline, specifically here in Florida. But I wanted to share this with you guys because there's a cool map that I want to show you that shows just how many layoffs have happened so far in 2023 throughout the entire country. But let's get into this for a second. First of all, if you have an employer that has more than 100 full-time employees, they need to provide a 60-day notice before laying off 50 or more people at a single work site. And that's where they get this information from. There's this brand new list of all the job cuts that are going to be coming down the line here in Florida. Tyson Foods, they're cutting 219 jobs by January. Monterey Mushrooms, 214 jobs by January. Baker Hughes, 183 jobs by January. Jacobs Technology, 173 jobs by January. Venus Fashion, 129 jobs by January. Intel Logix, 102 jobs cut by January. Orlando Sanford, they're closing a facility at their Orlando airport location, which is going to cause 267 people to lose their jobs. And that's just to name a few, guys. But really what I wanted to show here is this map of the entire country showing how many jobs have been lost throughout the entire country so far. And the darker red the state is, the more jobs that have been lost. And surprise, surprise, California has lost the most jobs out of any other state. They've cut over 55,000 jobs for 2023 so far. And here in Florida, there's been about 9,300 layoffs. But you can see other states that have big layoffs too, like Colorado, you got 27,000 layoffs there. You got Texas at almost 22,000 layoffs. Illinois at 22,000 layoffs. New York, 37,000 layoffs. I mean, these are big numbers, guys. These are a lot of people that have had to hit the unemployment line this year because of these layoffs. But everybody keeps saying how great the economy is. We just had this Fed meeting, and the Fed said, listen, we're expecting to do 3 rate cuts next year, but even if we do, it's not going to happen until at least the second half of 2024. And right away, the investing market is saying, no, it's going to happen by March. Like, everybody's just being completely overly optimistic about where things could go, guys. And there's nothing wrong with being optimistic in life, but I think being optimistic on this economy that's flashing red signals everywhere is kind of foolish right now. I'd rather set my expectations lower, and then when something great happens, be surprised and delighted by it, than, build up these massive high expectations of where things are going to go in 2024 and 2025, and then be completely disappointed when it underperforms or, things get far worse and we end up in a recession. Another thing that was in the news this week that Steve sent me is how Warren Buffett has sold $28.7 billion worth of stocks so far in 2023. And a lot of people are looking at this as a sign of the times, saying that, hey, this guy is basically, the king of investing in the stock market. And why would he be getting rid of all of these stocks if he didn't see a recession coming down the pipeline, right? They're saying that he's accumulated about $157 billion in cash because the prices of stocks are too expensive right now. And if anybody would know that, Warren Buffett knows. Steve Hank, who is a professor at Johns Hopkins University, he is also saying, we got to look at M2 money supply, guys. This is something that's being sucked out of the system right now. There's actually less physical dollars circulating right now than there was a year ago. And it's come down about 3.3% since the Fed started their quantitative tightening cycle. And there's only been 4 periods throughout US history where this has happened. And each time that this has happened, it's followed by a serious recession, just like the yield curve inversion, just like the Fed cutting interest rates. Every time that happens, it's followed by unemployment. But nobody wants to see these historical trends. Nobody wants to recognize that this is probably what's going to happen, guys. People just want to pretend like it's not happening and be extremely bullish and optimistic and thinking that this time's going to be different somehow. So they're saying that Warren Buffett is anticipating, economic hardship in the future so he can have a huge supply of cash in order to buy distressed companies, loan them money, and do things like that, just like he did during the great financial crisis. So in a sense, Warren Buffett's kind of doing what I've been telling people to do here on the channel. He's saving money, he's cutting back on any unneeded expenses, he's getting ready for the downturn, guys. He's ready financially, so that way when something does happen, when it does finally pop, that you're ready to pounce on some opportunities that might come up, whether it's stocks, whether it's gold, whether it's real estate, whatever it is you want to buy, Bitcoin, who knows, guys, whatever you're into, it doesn't really matter. But if you're not in a position to capitalize when things come down, then you're going to miss the boat. Like, I wish I had money back during the great financial crisis, guys, but I was only 20, 21 years old, just getting started in real estate. I didn't have a nickel to my name. So even though, the best deals ever with real estate were out there, I couldn't touch it. I didn't have any money. And I also wasn't smart enough yet to put together a deal with maybe some partners and, find some investors to help out and, get a small portfolio going with these good deals. I just didn't have that skill set yet. And now that I do, it's not the right time. But I'm willing to wait. I can be patient. I'm in no hurry for this to happen. I understand how a lot of home buyers out there who are on the sidelines are extremely frustrated right now. And I'm going to have a surprise for you with tomorrow's video, and we're going to talk to somebody about that, because I recognize that that's something that a lot of people are tired of. They're tired of waiting. They just want to get off the sidelines, buy right now, follow Barbara Corcoran's advice, and get on with their lives, guys. And that is totally understandable, because you can only wait for so long until you're just tired and you feel like you can't wait anymore. And you're welcome to do whatever you want. I don't think that's the smartest decision to make right now. I think a little more patience will serve a lot of people well, but I understand if people don't want to wait and they want to take the chance and bet and get in right now. I'm glad we could make it through this video. I tried to go through it as fast as I could. Rain's been kind of on and off. Luckily, it's not pouring. It's just a hard drizzle, I guess you could say. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.